So the model, the company, the structure, if I did nothing today, it is secure. I think Neometals offers security and opportunity. You're sitting down there with more than $110 million of cash. The EV is zero. You've got a strong board and management team. We've got history in developing these projects, building value, realizing value, and returning it back to the shareholders, because collectively we are the biggest group of shareholders. We're perfectly aligned. None of us have got an aversion to cash. We like making it. We like sharing it back. World-class resources in the ground. You've got some technologies there, or a technology, particularly with the battery recycle, where we're ahead of the pack, and we will deploy that with a partner. We've got a model that we will keep going through and applying it. It is a low-risk model. You know, you have a look at Buffett's rule number 1, don't lose capital. Rule number 2, so rule number 1. So if you don't put a lot in, you can't lose a lot. We developed Mt Marion into the world's second largest hard rock lithium operation with a couple of big, strong partners. We managed to make a lot of money, $200 million off of a $3 million investment. It was a project that Western Mining, who's a very famous West Australian company, before it was taken over by BHP. They had this deposit. It had gone to a prospector. We did a deal, got into it. It's easy to mine, hard to process. And so we brought in Australia's largest contract processor of minerals, a multi-billion-dollar company called Mineral Resources. And so we agreed to give them 30% of the project, but they had to build, own, and operate the plant with no capital up front from us. What we did is got the project ready, did all the studies, all the drilling, made it bigger, got all the approvals. And when the price started to improve in end of 13, 14, and 15, what we did is we managed to secure Ganfeng Lithium, which is China's biggest lithium producer, to come in to do offtake for the entire production. And when you do it with big partners like that, we developed it at 4 times larger scale than we had contemplated. So we were selling down equity in different stages, retaining offtake, and then at the peak of the market, we got them to buy us out. We continue to invest in the down cycle with a view to develop early, get out ahead of the pack, and then be able to sell out when it's in operation and making cash. Now, as small mining companies or medium-sized mining companies, you're often constricted by capital. So bringing in big multi-billion-dollar project partners enables you to build them at the optimal scale. And so it's in the value realization, bringing those partners, limiting the amount of capital that we put in, and accelerating the returns by selling down, but keeping offtake. So at Mt Marion, we were able to sell out, but keep our equity share of offtake. It's enabled us to return $45 million back to the shareholders in the last 4 years. So one, we've got to have super strong conviction in the commodities for the long term. We've got more than $110 million in cash. We've put about $10 million worth of investments, no debt, and some fantastic projects. And we've got every confidence in the commodities that we're in. Barambi, which is a massive deposit. It's got 280 million tons down to 90 meters vertical depth. It's such a massive resource.
Yeah.
Right? 280 million tons. The biggest rate that we've looked at mining it is 3 million tons. It is the world's second largest hard rock. If we had hydropower, it would already be in operation. Ultimately, I've got to sell it and get paid. So I need a big partner who can take a big volume. China is 50% of the world titanium market. Barambi is perfectly suited. We've done extensive due diligence at IMUMR. We've shipped over ore, we've shipped over concentrates, we've smelted it, salt roast leached it. And so we're running a semi-pilot plant here in Australia. That'll be followed then by the Chinese, and we're preparing 10 tons of concentrate. The Chinese will then build a demonstration plant and run that. Good thing is, once they build that plant, it only runs on our feed. So you've got some natural controls. I mean, we know how to write successful joint ventures. We've dealt successfully before with the Chinese.
Just on the lithium refinery, you've got this Indian partner, they're coming in, you're replicating the model, which is you're putting in very little cash up front. You've got a strategic partner with cash who are going to finance the bulk of this thing moving forward. I mean, what are the terms of that agreement?
It's a 50-50 joint venture, and they've got to produce no less than 50% debt
right
for that. So, you know, from building that as our own and, you know, funding on a 100% equity basis, we're looking at 50% debt equity, and then we're having 50-50. We started working in battery recycling in 2016. So we're acutely aware of what lithium and the lithium batteries, what needed to happen. If you get your old iPhone, the battery in that is about 20% by weight cobalt. So if you've got a ton of batteries, you've got 200 kilos of cobalt. So you've got about $6,000 to $7,000 per ton. We've got, you know, as you'd expect, you know, very keen interest from cell makers, car makers. We've been testing batteries for both in terms of the recycling, and we've been running the partner selection process in parallel. So, you know, essentially watch this space. In 2025, you're going to have 500,000 tons of batteries that are needing to recycle. Our plant looks to process about 18,000 tons of that.